And welcome back, investors, to Ticker Time News. I am Adam, and the market was kind of mixed today, still pressured by inflation. PPI data came in today a little bit hotter than expected, and we are ready to go. So this is the quick take on the market. We're going to start by going over what happened in the market today, why it happened, and what to expect for tomorrow. And then the most important part of this live stream is answering your questions. So if you have a question, leave the ticker symbol and your question in the comments, and we'll go over it live during the show. So let me get the quick take out of the way, and then we'll dive into your questions. Okay, deal. So today, the S&P 500, and that's what's on the chart in front of you. And remember, you can follow at home. You can follow along at home. There's my nervous, my nerves coming through for the live stream. You can follow at home. You can follow along at home. I did it again. There is a link in the description of this video for TradingView. You can set up a free account. It doesn't cost a penny. And you can look at all the charts that we look at through this quick take, through this live stream with us. So to look at the S&P 500 on TradingView, I use the ticker symbol SPX. That's what you're looking at. And this is the daily view. So each candle is 1 day to get a better glimpse of what's going on. So the S&P declined 0.1% on Thursday as risk sentiment remained pressured by growth concerns. There was ongoing selling in the large cap technology stocks and heightened volatility. The Dow Jones lost 0.3%, while the Nasdaq gained 0.1%. And the Russell 2000 was the big winner of the day. It gained 1.2%. So small caps outperformed today. And that was evident by gains in companies like SoFi, Matterport, RIVN, and even Aurora Innovation. Let me just quickly go through those. SoFi, SOFI, company name and ticker symbol. Look at this. It gained 3% today and another 1% in the after hours. Investors are buying the dip on SoFi right now. And I think it's a pretty good fair value price in the $5 a share range. That's excellent. And then going to Matterport, the ticker symbol for Matterport, MTTR. Matterport also had a pretty good day, up 7.6% during regular session and another 0.5% in after hours. People or investors who are people are buying the dip on this as well, down to $4 and something a share. And then RIVN, it took off today. RIVN, its earnings report this week wasn't that bad. It was up 17.9% today, up another 1.6% in the after hours. It's a $24 stock now. This thing was much higher than that, above $100 a share. Now it's down to $24 a share and some change. It had another good day because earnings weren't that bad. And then Aurora Innovation, that's a highly speculative stock. Their technology is innovative and it's for autonomy, mainly for big vehicles, tractor trailers. But ticker symbol for Aurora, AUR. Aurora Innovation also had a pretty decent day. And these are all small cap stocks. It was up 8%. 8%. So small caps is where it was at today. That's where the action was. Now, if we look at price action, it was a big focal point on the day. Let's pull up the S&P 500 again. SPX is the ticker symbol I use for the S&P 500. Let's go to the 5-minute view so you can see this a little clearer. I'm going to put just today on the screen. This is today's price action, right? We started off with a gap down before the market even opened, and then we rallied and then sold off throughout the day. But we had this comeback in the afternoon. So the S&P 500, it was up as much as 0.8% this morning. And then at its bottom of the day, it was down as much as 1.9%, which took the benchmark index within a few points of bear market territory. Now, a bear market is technically defined as a decline of 20% or greater from recent highs. So on the S&P 500, that high would have been on January the 3rd, that close. Let's go back to the daily view on the S&P 500 so you can see what I'm talking about here. I'm going to take volume off the screen for a moment because it just gets in the way sometimes, especially with these lower lows. But if we look right here, top kind of right side of the screen, this is January the 3rd. This is where we closed. The high was 47.96. Now, if we drop 20% from there, 20% from that high, we'd be right around 38.35. So if we drop 20%, that's going to be right about where this yellow box is on the bottom right of the chart. I'm going to go in a little tighter on this so you can see what's happening here. The past 4 sessions in a row, the S&P 500 has made new lows for the year. So we're only, right now at today's close, we're only about 2.5% away from being down 20% on the year for the S&P 500. And that would technically put the S&P 500 in bear market territory. Now, one thing to look at real quick here, if we go to the chart for the Dow Jones, you can see, let it load here real quick, the past 4 sessions in a row have been new lows for the year. It's down 12.6% year to date. So not quite as far as the S&P 500. Let's look at the Nasdaq though. The Nasdaq has also been making new lows for the year, the past 4 sessions. It's down 26.8% year to date. So the Nasdaq is technically in bear market territory. But if we keep going down, like I could see the S&P 500, excuse me, dropping down to 3,800, maybe 37, 3,600, getting pretty low, the Nasdaq could easily drop another 945 points to get close to 11,000. That's a possibility. And then let's look at the Russell 2000 right quick because, you know, it did technically make a new low for the year today, even though it was up 1.2% on the day. That's where it closed. But the wick underneath the candle, that's what made the new low today. And the Russell 2000 is down 22.5% year to date. So it is technically in bearish territory. Now, going back to the S&P 500 here for just a moment. Today, I sent a note to all of the investors on our Patreon. And the note was about the average S&P 500 PE multiple over the past 12 months, over the past 10 years, and what it was at the beginning of this year, and how and when that could point to a rebound trade in the market. And what any rally in this market would need to sustain was also available to our investors in Patreon so they could make the best decisions. And if this is information that would be helpful to you, then join us by clicking the first link in the description, the link in the live chat, or by going to tickertimnews.com/strategy. I'd love to see you there. Okay, back to the S&P 500. It was flirting with a bear market and flirting with bear market territory today. And that might have triggered a mechanically oriented bounce that lifted 6 of the 11 S&P 500 sectors into positive territory today. Healthcare was up 0.9%. Consumer discretionary up 0.8%. And real estate up 0.7%. Those were the sectors that outperformed in positive territory. Now, information technology, that sector was down 1.1% and was a heavy drag on the market and for sentiment too. Considering Apple, ticker symbol AAPL, let's look at Apple for a moment. It was down over 5% yesterday. And this is a massive company. The market cap right now is down to 2.3 trillion. 2.3 trillion. Now, luckily, there was a little bounce when it got down to the range of $135, $138 a share, Apple bounced from that position, but it was still down 2.7% today. So it continued to struggle even after losing its spot as the largest company in the world by market cap. Yep, another company has now taken over that place. The utility sector in the S&P 500, it sank 1.2% and was the absolute weakest link in the market today. Now, growth concerns still lingered as Russia threatened to retaliate if Finland joins NATO as planned and right on schedule. And the IEA lowered its global growth demand forecast. The Treasury market continued to signal growth concerns via another drop in rates, which is also a byproduct of some safe haven positioning amid the market volatility and peak inflation expectations following the Producer Price Index, or PPI, for April. That came out today. Now, the PPI report featured a better than feared, I guess I would say, core PPI reading, along with a moderate, or moderation, I guess I should say, in the year-over-year increases. But more on the PPI in just a moment. The 2-year yield fell 13 basis points today. We can look at that by going to US 0 to Y. That takes you to the 2-year. And you can see it's dropped today. It dropped to 2.51%. In the after hours, it is now up slightly, 2.58%. And that's typical for these to bounce around in the after hours, just like normal stocks would. And then the 10-year, it fell 10 basis points today. That's a pretty big drop. And you can look at that, US 10Y, that takes you to the 10-year. How's it going? Greatly appreciate you being here. Just saw the message in the chat. Let's do this. There you go. Right. So the 10-year today falling to 2.82%. It's up a little bit in the after hours to 2.85%. But remember, the 10-year earlier this week hit 3.2%. That's a pretty big difference. Now, this has been a stiff and pretty steep fall from May the 9th, the past 4 sessions, the 10-year dropping. Now, I do believe it is possible, and I mentioned this in yesterday's live stream, that the 10-year could go to 4% in a short period of time. That's kind of where I think it may be going. Now, I don't typically talk too much about this metric in the market, but it hit a new high. The US dollar index, it continued to remain strong in these uncertain times. It rose 0.9% to 104.8, setting a fresh 20-year high on the dollar. Now, oil today, yeah, that rose a bit, 1.2% to $106 a barrel. You can also look at that on TradingView. If you want to type in crude, oh, I need to get my cursor back over here on the chart. There we go. You type in crude, right? Oil. And you see the WTI crude right here at the top. You can click on that. You can also look at Brent. There's a lot of things you can look at. But here's oil. This is where it ended up today. Just a slight gain, 1.2%, not much. It's up a little bit higher in the after hours. It's getting close to $107 a barrel right now. But this is its movement. It's been kind of volatile this week, much like everything else. And oil rising 1.2% today, despite the IEA's reduced forecast. If growth is slowing, then oil prices should also moderate a little bit and come down. But we've got record high gasoline prices, record high diesel prices. We've got shortages in diesel. that's not very good for the economy. That's going to look pretty bad on inflation for next month, but we still have a month before we get to that. So that's not really in the forefront of what people are talking about right now for the market. Now, looking at some positive news, the St. Louis Fed President Bullard, which is an FOMC member, and San Francisco Fed President Daly, which is an FOMC member but not a voting member, said they prefer 50 basis point rate hikes instead of 75 basis points. And Treasury Secretary Yellen, she said that she doesn't think the huge losses in stable coins will cause systematic issues for the financial system. Now, on a related note, Fed Chair Powell was confirmed by the Senate for a second term. Now, separately, the session was filled with short covering activity, which could have helped out small caps that were really undersold. Most notably, this was evident in the sharp gains of Bumble. Yeah, that social media dating site, I believe is what it is. Well, the ticker symbol for Bumble, BMBL. Wait till you see the gains it had today. 26.8% off of its earnings. Earnings were a little bit better than they expected. Pop it up here. They reported a profit, 13 cents per share. They were expecting to come in at a loss of 4 cents a share. So that beat by 17 cents or 415%. Pretty good for a growth company, a small cap growth company. Its market cap is $3.3 billion. Revenue came in at $211 million, which was up by nearly $3 million or 1.4%. And then there was another big mover today, Rivian, ticker symbol RIVN, the electric pickup truck manufacturer. Rivian came in today 17.9% and another 1.6% in the after hours. Now, I mentioned this at the very beginning of the live stream. Rivian was up over $100 a share, 120, 125, and its all-time high, $179. Now a $24 a share stock. Investors are buying the dip on this one, or there's some short covering activity causing it to bounce nearly 18% today. And this was following pretty decent earnings report for Rivian as well. And then there was another one that surged today, Carvana, ticker symbol CVNA. Wait till you see how much it was up today. 24.6%. Profit taking in the after hours, it is down 1.6% in the after hours. But all of these companies have something in common. This year has been horrible for them. Horrible for growth stocks. Horrible for speculative stocks, which is to be expected in this macro environment of a lot of fear, a lot of inflation, a lot of worry about growth. What's the second half of this year going to look like when the first half has been a bloodbath? Horrible. Well, Carvana, it jumped this 24.6%. It was even downgraded this morning by an analyst from a buy to hold. So that typically causes stocks to go down. So that's why I think there was some short covering activity in the market today, especially for these majorly oversold growth and speculative type stocks. Carvana for the year right now is down 83.6%. Oh my goodness. It was up 20, let's call it 25. Let's round it up, even number. It was up 25%. You add 25% that it was up today to the 83.8% that it's down year to date right now, and you've got nearly 100%. Carvana has lost nearly 100% of its value if you take out today's 25% gain on the year. these companies they're getting pretty ripe for picking, but not yet. Not yet. And then speaking of riskier type assets, let's talk about crypto for a moment, because there's a big deal crashing and collapsing going on in the crypto market. Let me pull up Bitcoin on the chart so we can look at this here. Bitcoin just sunk. It sunk last night. It was like midnight hit and boom, this thing went down. It has got a huge wick on the bottom of this. It got to a low of 25,000. 25,338. And now it's back up nearly $4,000, $5,000 there, or points, however you'd like to look at it. It's at 29,114 right now. It's moving quickly. I'm going to go to the 5-minute chart here for Bitcoin. You can see that bounce that it's had since hitting its lows. Let's get it all in here. Okay. 5-minute chart. So we've got a lot we got to squeeze in here. Okay. All right. What's on the screen right now is about the past 24 hours, maybe a little bit longer. You can see the big drop off here. It came in two big chunks. There was an initial drop off and an immediate bounce back. And then the two smaller ones. Well, bigger. They were much harder falls. But then it rallied, and it's trying to catch its footing. Now, there's a cycle in Bitcoin, in cryptocurrency, right? It's the halving cycle. It happens every 4 years. There's a cycle to Bitcoin. And if I go back to the daily chart for Bitcoin, I got your question there. I want a short Carvana. Carvana be buying vehicles way above asking price. How much lower can it go? Well, let me go back to Carvana. Let me go back to Carvana right quick. If we're looking for where could the low be for Carvana, with it being such a speculative and growth company, I'm going to literally go back here to when it became a public company. All right. That was down. Let's see. When did it open? At what price? $13.50 was the opening price. If we look here, we've got a couple of interesting points. One is, let me get my drawing tool here. One is here on Carvana, right there. And this was a low, much not quite as low as it is right now. Or yeah, it was a little bit lower. $28.54 was the low on this point right here. It could totally go that low again. And then that was a higher low. And then we have to go back here to when it first became a publicly traded company. And we're looking at highs and lows, maybe between $11 and $13 a share. After, right in this area right here. $11 to $13 a share. I think it could get, it could totally get back that low. Especially if there was short covering activity that helped to cause this pop of 24% today in its share price. It could easily come right back down tomorrow, on Monday. So if we're looking for a low, I don't know where the low could be, but I could totally see it getting sub $20 a share, because I don't think this market has quite hit the bottom yet, but I think it's getting close. But I don't think it's quite there yet. So sub 20, I could easily see that. but I don't know exactly how far it could go. Hopefully that answers your question, or at least gives you a little more clarity. Back to Bitcoin for just a quick moment. Cryptocurrency, Bitcoin, it has that 4-year cycle. And when I go here to the daily chart, it's really tough to see that cycle, but you can kind of see it. It's just the past couple of years, Bitcoin has gone absolutely to the moon and crazy. But we have these peaks, right? These peaks that you can see in Bitcoin, and then of course our most recent peaks. But every 4 years, there's a cycle. And usually after the halving cycle, or the beginning of the halving cycle, Bitcoin usually goes up in value. And then it usually comes back down in value. And then the cycle starts again. It goes back up, comes back down. Usually it goes up parabolic at the end and then comes crashing right back down. But it doesn't get as low as it was the previous cycle. So it's continuing to move up. And they have a saying that when it's coming down, that it's a crypto winter. Well, what has happened here? A high of 69,000 and down to 25,000 earlier today. That's taken the crypto winter and turned it into a new ice age, right? So the crypto market sell-off this year has been harsh. And there's a sense that the volatility in Bitcoin, down nearly 60% from its all-time high, is a bit different when you compare it to the typical pullbacks of the past cycles. Trading down to its lowest level since Q4 of 2020, any purchase since that point, any purchase made since Q4 of 2020 for Bitcoin, you are now underwater. You're now sitting with a loss, holding it for nearly 2 years, and you're at a loss. So this isn't just Bitcoin too. Nearly any and all of the other major cryptocurrencies are doing this, and purchasing in the fourth quarter of 2020 is also underwater now. Now, sure, the price of Bitcoin is still up over the last several years. We can clearly see that on the chart. And I highly doubt that it's going sub to 20,000. Like 20,000, I think there would be some serious brake pumping going on with Bitcoin. And I think there would be a lot of buying happening if it did happen to get to 20,000. As a matter of fact, I'm going to put a mark here right about 20,000. And you can see there's a peak right here where that happened. So there is support at this level around 20,000 for Bitcoin. And it could totally get that low again. Now, over the long term, I still have a bullish take on Bitcoin. And I really think there's some bullish factors that are still in play. That said, the reality is that everything from the chart to market sentiment to macro fundamentals are broken right now. And I don't see a quick turnaround from here. An expectation is for continued volatility, with risk tilted towards further downside. And that's for the stock market too. And you could move that to any other coin as well. Ethereum. It's not having as nice of a bounce as Bitcoin is right now, but it had its own bounce. The wick on today's candle is much, much lower. Down to, what did it get to low today? 1,701. That was its low, and it's back up to 1972. So not quite as significant as Bitcoin's move. Okay, let's move on to some other economic data from today. The Producer Price Index. As a matter of fact, let me go ahead and pull this up on, I should have done this already. My apologies. Let's take a quick little 60-second break here so we can get the PPI up. Okay. I'll bring it over here. Here we go. Just like the consumer price index or CPI, that's reading inflation for the consumer. The producer price index is reading inflation for businesses. So it's a little different read, but they both tell us information about inflation. And you can see it right here. The producer price index for final demand increased 0.5% month over month in April, as expected, following an upwardly revised 1.6% increase in March. So you can see that inflation, just like in the consumer price index, inflation is kind of, maybe it's made its top. Maybe it has peaked. Maybe March was peak inflation. Maybe. 1 month really doesn't give us a whole lot of information, but it is saying that inflation may have slowed down a little bit. Now, excluding food and energy, the index for final demand jumped 0.4%, following an upwardly revised, we don't like to see those on inflation readings, 1.2% increase in March. So over 0.5% decline in April from March's increase. Now, there was a moderation in the year-over-year growth rates. The index for final demand was up 11% versus the 11.5% back in March. That's still steep inflation, but it may have plateaued. And the index for final demand, excluding food and energy, was up 8.8% versus the 9.5% in March. So again, a plateauing effect. The key takeaway here is that there was some slowdown in the year-over-year changes in inflation. But even so, inflation rates for producers remain at dreadfully high levels that will pressure profit margins if not passed along to the consumer, raising the consumer price index, right? Yeah. So when we look at the CPI and we look at the PPI, both of them are showing that inflation cooled down a little bit. It's still at elevated levels, but they may have peaked. May have. Let's see what next month tells us before we go jumping in saying inflation has peaked. Because it's still bad. It's still at elevated levels. So that is what's bringing this market down. But I think we're getting close to a short-term low in the market. We're getting close. Maybe another 2.5%, 5%. That's possible. Now, initial jobless claims for the week ending May 7th increased by 1,000 to 203,000. Continuing claims for the week ending April 30th decreased by 44,000 to 1.3 million. That is the lowest level since January the 3rd of 1970. The main thing to know from the jobless claims is that we're not in a spiral right now. We're not in a wage price spiral, and that's a good thing. That could bring the markets down. But the jobless claims continue to run near historical lows, historically low levels that are consistent with a tight labor market that can continue to create wage-based inflation pressures. But we're not spiraling out of control just yet. And hopefully we don't, because that would be really bad. Now, looking ahead, I got my days mixed up earlier. We do have another day of trading this week. because tomorrow is Friday the 13th. Maybe that's why I skipped right over it earlier. Looking ahead to tomorrow, Friday the 13th, investors will receive import and export prices for April and the preliminary University of Michigan Index of Consumer Sentiment for the month of May. Hopefully, this will not be a spooky Friday for investors this Friday the 13th. Okay, let's see here. This is the third time I have gone through a fear market in the crypto. This is, actually, let me do this. This is the best. This is the third time I have gone through a fear market in the crypto. This is a gift to investors. Smart money will be buying. Wink, wink, Ray Dalio. I think that too. I honestly do. Let me go back over here right quick. That's Ethereum. Let me put Bitcoin up. Most people are familiar with Bitcoin. Here's the daily. I mean, that wick dropped down, and it's 29,021 right now. It seems to be kind of trying to hold flat around that 29,000 level. It was there earlier today too. But if you look at the wick on this candle, I know it's hard to see on the screen, but it got down to 25,300 today. 25,300. And now it's back up to 29,000. That's a big difference. What's the percentage difference on that exactly here? If I'm measuring from where it dropped to where it is now, that's a 14.5% wick for Bitcoin today. That is a major move. So as it gets down to that $25,000 to $20,000 level for Bitcoin, that absolutely is a buying opportunity. Absolutely. I completely agree with you. These cycles continue and continue and will continue. And each time we move it up a little bit more, a little bit more, a little bit more, right? So while this is scary for new investors, anyone who's come into crypto within the past 2 years, this can feel scary. This can feel like, oh my gosh, Bitcoin to zero? No way. Don't worry. Just take a deep breath, relax. Everything will be okay. At least that's my thoughts there. I mean, the markets, they rise, they fall. And again, just like the stock market, any investor who has jumped in since COVID, since the March lows of 2020, excuse me, hasn't experienced this type of fall before in the market. So I can understand for new investors how scary it can feel. I mean, the middle of the screen is the S&P 500 for 2022, right? I can open it up a little bit more to be a little more accurate. A little bit of the left side of the screen, not so much. Like what's right over my head, ignore that part. But the rest of it, for a new investor who has only experienced the ride in the past 2 years, what's happening right now is dreadful. I mean, you go to the March 2020 lows here when the S&P 500, where did it bottom at? It bottomed at 2295. And right now it's at 3930. And it peaked up here on March the 4th intraday at 4774. So that's been a nice 2-year ride from March 2020 to January 22. And any new investor who jumped in within this time period is freaking out right now. Man, what do I do? This is dreadful. I mean, that's the word of the day. Dreadful. Can it stop? or will it continue to fall? There will be a point in time when it does stop. And I think we're getting close. I mean, my target mark here, I mean, it's getting close. The wick almost touched it today. And can this be support? If we tap a new low tomorrow, and remember, we're only 2.5% away from a technical bear market setup for the S&P 500, and that's at 20%. When you've dropped by 20%, and the Nasdaq is already in it. And like I told Patreon members yesterday in a note that I sent out to everyone, what you need to watch for are the big cap, the mega cap companies. They're going to be the leading indicator on when we hit a bottom, and if we do get a bounce, can it be sustained? That's your clue and key to watch. Hopefully, I drove that home in yesterday's video and made it as clear as possible. But right now, like the note that I sent to Patreon members today about the PE ratio of the market, of the S&P 500, it is compressed. Can it compress more? And what's going to provide the bounce back, right? If you're holding a spring in your hand and you compress that spring, it's taken a lot of force and a lot of energy to compress it. And then as soon as you wobble or let go, it pops. What's going to be that rally? It's the mega caps. That's what's going to sustain that spring bouncing back. So just keep that in mind. Put up a sticky note, write it down. Mega caps will be the guide to get us out of here. All right, let's see here. What do we have? I'll buy Bitcoin at $5. Absolutely. My gosh, if Bitcoin got that low, that would be scary. I would love to go back in time and get Bitcoin at $5. That would be amazing. Absolutely amazing. Okay, that's everything that I wanted to cover in today's video. I know my quick takes are getting a bit longer than quick take. I might have to rename that to something else. If you have a question, go ahead and put it in the comments. Let me know. We'll go over it now. I'll give you a minute or two to of time here if you want to ask anything. Just to make sure that everyone is cool. These are great. Thank you. I greatly appreciate that. And I greatly appreciate you as well. Absolutely. Absolutely. The whole reason for the live streams are to get your questions answered, to get information to you, to provide value for you, because we're all on our own individual investor journeys. And whatever the investor needs, we can find. We can work together as a group to get that information, and we're all on different parts of that path, but the path is almost the same. The investor journey, it's almost the same for us. Thoughts on buying Nvidia? Let's pull up Nvidia and check that out. Learn to be patient. Thank you for your valuable information. Patience is definitely a huge, huge key to investing. Huge key. All right, NVDA is the ticker symbol for Nvidia. I had a buy box set up for Nvidia, and it's almost there. My squiggly lines were totally off, but it's still approaching that green box. I think Nvidia is still going to fall. I think Nvidia is headed for that green box. I should have made it easier to clean this up. Nvidia does have earnings in 13 days. So we shall see how well things are working out for Nvidia with the supply chain. That'll be a big read. I'm sure their data center business is growing and doing good. And let's just pull it in here a little bit. So the top of that buy box is sitting right at about $150 a share. It's not quite there yet. It got to, let's see here, it got to $155 today. So another $5 and it would have entered that buy box. But I'd like to see it, not just the wick of the candle get into the buy box. I'd like to see the candle close in the buy box before making any move on Nvidia. And this is the thing about, being patient, right? Being patient. Nvidia has been coming down all year, and it kind of got hung up here at the $200 mark. It bounced off of that several times, a couple times just in March alone. And then we had that rebound rally, right? And many people probably thought, well, I missed it. Oh man, that was my time to buy. Remember, that's when Meet Kevin got back in the market. But now we're lower. Patience pays off. So I'm very glad that you brought that up about patience. That is a huge key to being successful. Let's see here. Good to see you again. What do you think about Uber? I think they will do good now. Hope they get a positive money flow. Yep, that's a good point. Let's see here. Will you be buying gold or silver stocks? How about precious metals? Okay. Let me tap into Uber right quick, and then I'll talk about gold. I think gold is going to be the outperformer of the year, which is kind of weird to say. So far, it has been. Gold has been a great store of value so far this year. And as long as if inflation continues, I know I was going to talk about Uber first, then gold, but as long as if inflation continues going up, gold will continue to go up too. It's once inflation starts coming down, that's when we might get a little flicker in gold and gold coming down too. But oh, I lost my train of thought there. Oh, if inflation does plateau, that's still a good sign for gold as well. And I think we're plateauing right now for inflation. But I also think that we're currently in a recession. And remember, to technically be in a recession, you have to have 2 consecutive quarters, 2 quarters back to back of a contracting, shrinking GDP. We already got the first quarter of shrinking GDP. And I would have to say that this quarter that we're in right now, the GDP is shrinking. So I think we're in a recession right now. Indicators seem to be pointing that way too. All right, let's pull up Uber here real quick, and then I'll pull up gold. All right, here we go. Oh, let me hop over here too, because I can also pull up Uber's. Thoughts on SoFi? Just joined. Yeah, SoFi. Yeah, I do think it's good. I think SoFi is going to come back down a little bit. SoFi had a rally today. A lot of small caps did. I think there was some shorting activity, covering going on, causing a bunch of small caps to pop today. But I think there's a little more pressure to be had on the market. And I think SoFi will go down a little bit more. But SoFi, $5 a share, $7 a share. I mean, it's a steal, I think. SoFi, I think, is a great company. And if you're looking long term, I don't mean like you're looking to swing trade it or something like that. If you're looking to buy SoFi right now, hold it for 5 years, 10 years, 15 years, you've got yourself an excellent buying opportunity right now for SoFi. Okay, let's see here. Uber. Okay. Let's look here. Uber earnings. Yeah, this was an odd one. It was an odd one. CNBC reported today, too, that Uber is looking to cut costs, which should help it, right? But it was up 3.1% today. It also got this little bounce today. But I don't think we're at a bottom yet here, even for Uber. I know that things been dragged down, and a lot of these growth stocks have been dragged down in 2022. But I really think it could go lower. What's this low for the March low? Let's see. $13.71. Okay, that was its low. So for a growth stock like Uber, for a speculative growth company like Uber here, I think we're not at the bottom quite yet. I think it could drop a little bit more. It's low today at 21.69. I think it could get into the teens. We're not quite at the bottom yet. I could see another 5%, 10% drop easily before we're at any sort of bottom here. But we're getting close. Now, let's see here. Okay, so in the CNBC report today, they said that Uber was cutting costs, and they believe it's due to a slowdown. They had an email from CEO. Uber employees discussed that a major shift in the company's spending and hiring plans was coming. His comments about pulling back on spending didn't necessarily come as a huge surprise, given that they echo what he said during last week's earnings call. Unlike Lyft, which plans to ramp up incentives for drivers to boost supply, Uber stated that they will keep driver expenses in check since its driver base was at post-pandemic highs. So Uber's got plenty of drivers, and Lyft is looking for more drivers. Let's see here. Let's see. The email to employees point to a company that's preparing for a difficult period rather than one that's anticipating a surge in demand. Growth concerns. See, that was a key when I started this live stream. One of the pressures on the market today was growth concerns. I think the second half of this year, it's going to be a little bit. It's going to be harder than the first half of this year. I think earnings are going to come down some. I mean, costs are already ridiculously high. How can costs go up even more? Well, it's always possible. Inflation's elevated, but really, can it go higher? Oh, yeah, it could. We could go back to an early 1980s type of economy where everything cost a lot. So I don't think Uber's at its low yet. I think it can go lower. But their business model is intriguing, and I don't dislike the company. I kind of think of, when I think of Uber and Lyft, I think of DoorDash, and I think DoorDash also intrigues me with their business model, and they rely heavily. I mean, the blood of their business is the drivers. And the same thing would apply to Uber. I mean, their business is built on their drivers. So as long as they have a good supply of drivers, they have to have the demand. And I just think that the second half of this year, see, the consumer hasn't really slowed down in spending, but they're starting to. A lot of consumers are starting to dip into credit as their savings accounts start to dwindle down to keep up their lifestyle. But I think consumers are going to start saying, well, we can't go into big debt, so we've got to cut something. And that's why I think the second half of this year is going to be worse than the first half of this year for the overall economy, because consumers haven't slowed down yet, and they're going to slow down, right? That's at least my theory right now for the economy. Okay, let's see. Oh, yep, want to go to gold on the chart. So on TradingView, if you spell it right, if you just type in gold, you get a lot of choices. The first one here with US dollar versus the ounce, that's what you want to look for. That's where I go. And the ticker symbol is just gold. And you can see here for 2022, it hasn't been that bad. I mean, gold had a big rally at the beginning of the year, which started, and let me mark the beginning of the year. It's right here. This vertical line right here is the beginning of 2022. And we had a nice rally in gold. And there's this trend line. Gold bounced on it. And let me circle it here to make it a little clearer. Gold bounced on that trend line right here at that circle. Several sessions in a row also right there. And if we continue that trend line, it has dipped below it slightly, but it's also at an area of support. Let's get that trend line back where it belongs. So when we look at right now, you can see that it's gone below that trend line. Happened right here. But it's also on this area of support right there. So in my opinion, I think gold is looking pretty good, especially if it can hold this trend line here. And then the next area, if it does break down below that, I think we're looking at 1800 even is kind of like a psychological level, right? Where it's really got to hold in. And you can see that trend line started last year for gold. It's September of 21 last year, September. That's when it hit this and started this trend line up. And it's broken down over the past, let's see, we'll call this 1, 2, 3, 4 sessions where it's broken down below that trend line. If we could get a bounce back up above it, that would be great. It did slip below its 200-day moving average, which isn't the best thing that you want to see for gold. But the relative strength index, I mean, it's been dragging since April the 28th, almost flat at about 28.6 on your relative strength index. And then money flows too. I mean, they've been relatively flat here. So I think gold's looking for a bounce. If we look at where it's at right now, RSI wise, The last time it was down here at this level at 28, we have to go back to August the 11th last year. And that's where it had this right here above my head. It's this big V shape where it dropped down 2 sessions in a row, and it got down to a low of 1681, and it bounced right off of that. That's the last time the RSI was as low as it is now. So I'd like to see a bounce here for gold. Okay, let's see here. Oh, you are very welcome. Very welcome. As far as other precious metals, I don't really follow anything else other than gold. So I probably wouldn't be the best person to answer a question on other metals. But gold for sure. And I do want to see a bounce here for gold. And it's had a slight one. And I want to see it back up above the trend line here. That would be wonderful for gold. And again, as long as inflation stays elevated, gold should stay elevated too. It's when inflation starts to come down, that's when gold would come down too, at a faster rate than what it has been doing over the past month. You are welcome. Greatly appreciate it. All right, I'll hop over to SoFi here again. I talked about at the very, very beginning, SoFi, and I talked about a little bit when I saw the question pop up. SoFi, I think, is wonderful. And $5.66 today. It was up 3.1%. It was actually up yesterday 4.5%, which is interesting. When we look at the life of SoFi here, I mean, it has come down. What is it down year to date here? 64.2% year to date. It has dropped. And if we look at this high that was set almost February 21, over a year ago, it was 28.26. So I'm going to go from 28.26 because I don't know. That doesn't fit into the 52-week low or year to date. And then go to where SoFi is right now. So it's 80% off of its highs, down 64% year to date. So 80% off its highs. That is a huge discount for such an awesome company. I think SoFi is wonderful. Let me see here if there were any notes about SoFi today. Oh, just that it was a gainer today. And SoFi's earnings were earlier this week. I talked about them when their earnings came out. They actually released their earnings earlier than expected. It was supposed to be after the close. They released them before the close, and they were good. There wasn't anything real negative about their earnings, and that's probably where most of the bounce came from. If we look here, I want to go in, let's see, the 10th. I want to go in and look at all right. So, all right. So the purple vertical line, this is the morning of earnings for SoFi. And then I'll put another one in here. All right, there's the vertical line for the close for SoFi at the day. So SoFi sank at the beginning of the day, and then right here, and I'll circle it here. Right here, there was a gap up. And that's exactly when SoFi released its earnings report earlier than it was supposed to. And then the stock shot up because of earnings, and then profit taking occurred, of course, into the close. And then since earnings there, we get yesterday, and it's kind of flat. I mean, it was up significantly, but most of that occurred at the open. And then today, the same thing. Most of today's gain came from the open. And that happens a lot, just so you know. A lot of times, your money on the day is made within the first couple of hours right at the open. And then it was kind of mellow the rest of the day. So nice gain for SoFi there. Although SoFi 2, I think it has a huge potential. Get my words right. You're welcome on Uber as well. So yeah, I think SoFi is a wonderful company for the future, for the long term. It's got no notes here about it. Let's see here. I don't see any recent notes except for earnings for SoFi. So for SoFi in their earnings that were out this week, they had a record adjusted net revenue of 49% year over year. It was the 7th consecutive quarter of positive adjusted EBITDA and continued robust growth in members. They had good products and cross buying. That was good, because SoFi is one, they can rope you in for a student loan, and then they can cross sell you investing, ETFs, banking, almost, and other things, a credit card even. SoFi is really good at that cross selling. Let's see here. What else do they have to say? Anything important? You know, thinking about SoFi and, you know, the ETFs and being able to do some trading on the platform, Robinhood would be a very interesting takeover potential. I think Robinhood has got some takeover potential, and it would be interesting. I know SoFi's got a lot on its plate right now, but it would be interesting to see if, you know, SoFi could step in. And what's Robinhood trading at the close? Ticker symbol is HOOD, Hood. $8.56 a share. Wow. Just wow. And you look at where Robinhood IPO'd and the fall this thing has had. Gee whiz. I still had it on the 5-minute chart, had to switch it up. Look at this. What was this high that it reached? $85 a share, and now it's an $8.50 stock. I could definitely see a company coming in, taking it over, offering them, I don't know. What's this right here? This is at $16.80 a share. Make a $15 a share offer to take them over. It would still be an expensive buy, but wow, that's interesting. I bought Hood at 33 and sold at 70 something. Awesome. Great job. Great job. Thoughts on tomorrow, and are we expecting any possible catalysts that can move the market? All right, let's put the S&P back up here. Daily view, spread it out. Tomorrow's Friday, and Fridays can always be a tricky day. Tomorrow's Friday the 13th, so there's an extra fear factor there. Don't want any black cats coming across the trading screen. But with the mix today, the small caps kind of getting a little bounce, the Russell being up over 1%, the Russell 2000 today. There was some short covering activity going on today. We're getting really, really oversold. If we look at the RSI here, it's sitting at a 28.8. And to get that low, we have to go back to the low on January the 27th, which is when we made, a couple days after we made our first real super low of the year. And we had to bounce off of that. So the S&P 500 has had 4 consecutive days. That's what these red circles on the chart are for, to indicate a new low for the year. So we've had 4 new lows of the year in a row. We could get a new low for the year tomorrow. It's not out of the woods. We could also see a slight bounce, but we have to watch mega caps to see if that's going to even be a possibility. So a new low tomorrow for the year is high probability. The S&P 500 getting ever so closer to that 20% drop off, that technical bear market situation, is highly probable. If we do get a little bounce tomorrow, they'll be selling into strength. So as the rally would go up, the higher it will go up, the more selling pressure that would come on towards the end of the day. Let me open up the 5-minute chart here to give an example. This morning, the market rises, right? We drop off. We have a gap down early in the morning before the market opens right here. Here's our gap down. And then the market rallies first thing, and then we peak up here, and then they're selling into strength because people want to get out of positions. But they're hoping that they can either cut some of the losses by selling as the market is going up. You don't know how much further it's going to go up, so you just want to cut this one as quickly as you can. So selling into strength, I think, would be a big position for any potential rally that we might get tomorrow or otherwise. Other than that, let's take these marks off of here. Okay, other than that, I don't think there's anything special for tomorrow, except it's Friday the 13th. We did rally into the close, so there is a potential that we could rally tomorrow. It's really hard to predict day by day what's going to happen in the market, because the market can just, react however it wants. But here's what it's looked like so far this week. All 4 circles: Monday, Tuesday, Wednesday, Thursday. And if we compare the rally into the close that we had today to any other time this week, it was probably Monday into Tuesday. Yep, Monday into Tuesday, where we gapped up right above my head here, right here. We gapped up overnight right there. That's the closest that we have to what happened to today. as we rallied into the close. And that gap up brought selling pressure. So it is possible that our rally into the close here could provide some selling pressure. And if we also look at it this way, if I put a line across the top here, there's still a little room to go before we would get to that line. And this trend line, it's got at least 3 touch points here. And for any trend line, so you know, you need to have 3 touch points or more for the trend line to be effective in your charting. So with this being the case, we're a little bit shy of that line. So that's what I'd be watching for tomorrow. If it, shot straight up to it, that's about 39.40. 39.40 is about where that line is. And we're at 39.30 right now. So another 10 points, or if you want a percentage, where we're at right now, just straight up to that line, it's only 1/3%. So it's not much until we're up there. Can we break that line? And if so, do we have enough momentum to break this line right here, which is the 200-day on the 5-minute chart, the 200-day moving average on the 5-minute chart? That's what I'd be looking to see. If it could break those 2 points, maybe we could get back to 4,000, but that's a big stretch. That would take a lot to do that. So just some thoughts there about tomorrow. It's really hard to predict day to day what's going to happen, but grand scheme of things, I mean, you can get a much better view. And it really looks like we're going to get into this yellow box down here. Okay, let's see here. Any other questions before I wrap this one up? Just let me know. Remember, well, if you're getting your question or two ready, go ahead. Just remember, live stream every day the market is open, after the market closes, and we go over what happened during the day, why it happened. That's the important thing to understand. And then, what's going to happen tomorrow, the next week, the next month, the rest of this quarter, and so forth. And the most important thing about this live stream is answering your questions. I love it. It's the best thing that I can do. And if you want to help us out, you can by clicking the like button, by sharing this video, helps tremendously, and subscribing. Those are all free things. It doesn't cost you anything but a few seconds of time to do it. And then if you like this information, you want more of this perspective, click the first link in the description, the link in the live chat, or tickertimenews.com/strategy. Join us on Patreon. We share notes all the time. Top 10 stocks on value, growth, dividend, momentum, you name it. A lot of great, valuable information over there. You are welcome. As always, I appreciate your time. Hopefully you learned something. And that's the biggest thing. If you did learn something, if you did see value in what we were talking about today, definitely click that like button. Definitely do that for us. Takes a second and it helps out greatly. How do you use options for forecasts? Okay. One of the biggest uses of options for forecasting is like a put call ratio, right? Are there more puts or are there more calls? And remember, calls mean the market is going to go up. Investors are placing bets or investments that they believe the market's going to rise. A put means investors believe the market's going down. So in a typical market, when you see a put-call ratio and you have more puts, that's what I would be looking for, in combination with what's happening on the chart, right? So if you're already really oversold, like we're getting right now, right? 4 new lows for the year in the past 4 sessions. And if puts were high, that investors think we're going lower, in combination with the fear that's in the market, then I'd probably bet the opposite of that. Now, reverse that, still on puts though. If the put was high and we've barely sold off, like we're back at in February, or we're back in March or something, and we've barely sold off at all, then I might lean towards, yeah, the market's probably going to go down some more. So that's one way to use options in forecasting. But forecasting is one of the most difficult things you could possibly do in investing, because you never know what news is going to come out, what headlines are going to move the market this way or that way. What's Russia going to do, right? Even though the potency of those headlines are starting to fade about the Russia-Ukraine war, but they're still out there. Now, the put-call ratio in combination with what's happening on the chart, that's one way to use options. And then you can do the same thing for individual stocks. If you look at the put-call ratio for an individual stock, use the same thesis there, and that should help you in making better decisions. For an individual stock, if the stock is like oversold, it's tanked, it's at the bottom, but there's still a heavy amount of puts against the company, watch for short squeezes or big bounces because of the heavy puts when the stock is already down a whole bunch. Like, I think that's what happened with small caps today, and that's why a lot of them popped today. So that's one way I would use options for forecasting. But forecasting, again, it's something that's very difficult to do. Now, with this market, and why I think, tomorrow, the next week, we could get sub 20% on the S&P 500 is I think there's still a capitulation move down just waiting for the market. Like, the S&P 500 could go sub 20%, 25%, 30%. A big, scary, fearful move down. If we go back to March of 2020, I mean, that totally happened, but this was so quick, right? The market fell, but the market was back within a couple months, a few months, and it was back almost. But the majority of the market had recovered. That's okay. If you go back to, let's see here, let's go back to 2018, 2017. All right, let's open this up right here. If you look at this, this is 2018 right here. And the top right here was January the 26th of 2018. And there was a big fall, a big move down. This is what I'm looking for right here. This was a 3.75% fall on the day. This one was a 4.1% fall on the day, a 2.1% fall on the day. So we've had those in the market recently. had a couple of bounces there. But if we look at where the top was here in 2018 on January the 26th, this top, to get back to it, and this is why the March 2020 was so much better than this. I mean, look, we have to come all the way over here to August of 2018, and it took a long time to make this back up, to make this fall from the high, a long time. There's some similarity there. The inflation wasn't. I mean, this was a housing market problem. If we look at other points in history when things like this has happened, I mean, look here in 2016, where we had this double whammy here and double bottoms on both. This move right here down. Boom, boom, boom. What was this? 2%, a 3%, and a 4% move down, and then a 1.3%. You want to see either a big fall like this, a big fall like that, or a big wick like that. That's when you know you're getting to a local bottom. And I say local bottom because even though here on this first red circle that I drew, yeah, that was a bottom and we had a rally. We had a double bottom and then a huge rally out of that hole. But it wasn't over yet. Kind of like how this year is feeling. Every time we go down, we're thinking, oh, okay, we're good. We're good. I've had enough. Let's rally and bounce now. But then it doesn't happen. And we can go back even further in time. Here's 2008. There's a theory out there about the dot-com bubble, the housing mess, so 2000, and then 2008 housing crisis, mortgage. And then we move to today, and today it's like the can was kicked down the road, both of these big times, and we went from stocks, right, to the housing market, but now the can's been kicked over to the bond market. And that's where the big fear lies, that if that has a collapse, like the stocks did for .com, like the housing market did for the housing bubble, that could really wreck things. So let's not hope that that theory pans out. But here, when the housing market occurred, right, we had several steps to get down to the final bottom. And this is what you'd be looking for. We open this right here. Now, again, this is a daily chart. I mean, you can see some similarities here to the fall that happened in 2008 and 2009, but this took a long time to finally reach the bottom, and then a long time to dig ourselves back out of that hole. So here on the daily view, I mean, look at how the 50-day moving average just moves right along with it. That lets you know this took some time to fall from the top. Here was a death cross. And it just took a long time. And that's what we're looking for or looking with today. You know, even though we've had this big fall down and it's taken all year since January to reach this point, I still think, you know, there's another 5-10% that the market could fall before we finally get to the bottom and start building our way back out of this. So just my thoughts there. Hopefully they provide some value for you guys. All right, I'll go ahead and wrap this one up for today, and I'll be back tomorrow after the market closes for another live stream, which, remember, the most important thing is answering your questions. So if you have them, I'll be here. You can always find me. Okay. If you could click the like button, that is very helpful. Sharing this video is helpful. Making sure you subscribe to get the notifications is helpful. And then clicking the first link in the description, or the first link, or the link that's pinned in the live chat, and join us. And join us. I'd love to have you there. All right. So I guess that's all the questions. And we'll wrap it up for tonight. Yep. See you tomorrow as well. Absolutely. Okay, ladies and gentlemen. Thank you so very much for joining me. I appreciate the time you spend with me. I appreciate the questions. And I'll see you in the next video.